And now for 7 Minutes With, which will feature a short interview each month with the leader of a distribution or manufacturing company.
I'm Janelle Stolten-Holtmeyer, Associate Editor of Modern Distribution Management, and today I'm talking with Joe DeAngelo, CEO of HD Supply. How are you?
I'm great, Janelle. How are you?
I'm doing fine. Things seem to be looking up a little bit for the company.
Well, I'm exceptionally pleased with the team's performance. The market's stabilizing and poised for steady growth. We're in the early stages of an upswing. We believe that the investments that we've made during the economic downturn uniquely position HD Supply to grow faster than the markets as they recover. During the downturn, we've enhanced our product mix, we've continued to improve our operational efficiencies, and we made critical investments in our technology systems. In addition, our teams are intensely focused on maintaining and growing current customer relationships and earning new business by providing outstanding service. We realize that we create value when we grow profitably faster than the markets in which we participate. And more than 40% of our future growth relies on exceptional execution of initiatives to stay ahead of our competition and make HD Supply the company everyone wants to invest in. Now, we'll need to earn every inch of that ground, but I'm confident that our customer passion, marketplace momentum, and relentless execution on very focused initiatives will differentiate us and deliver an exceptional level of value creation. So in this gradually improving environment, we're cautiously optimistic. Our growing liquidity and the extension of the majority of our debt maturities to 2014 enhances our solid financial position. And thanks to the hard work and dedication of our associates, our average daily sales for June exceeded last year. With most of our markets still relatively flat to down in the first half of 2010, this is a fantastic accomplishment. And this is the first time that we've experienced aggregate average daily sales growth since 2006. Additionally, we continue to exceed our financial targets as we begin to rebound from the impact of the global recession. So I'm very excited. We're accelerating into a growth mode by continuing to earn more profitable orders on a daily basis.
Great. Now, HD Supply announced it would be completing its major restructuring effort by the end of 2010. With that in mind, what's the outlook for 2011?
We're looking forward to continued improved performance in 2011. We're finally able to see tangible improvements in long-term market conditions, and we have a secure capital structure which allows us to always meet our commitments and to make mission-critical investments in growth initiatives, while we also work to become more cost and cash efficient. The current environment requires us to continue to work hard to grow our customer base and market share, and we're in a position financially to continue to invest in our growth through technology enhancements, strengthening our product mix, and attracting and retaining the best talent. And we're creating a company that will continue to be successful during future down cycles and be positioned to fully capitalize on strong market environments.
You mentioned end markets just a second ago, and those seem to be all over the board for where HD Supply operates. Residential markets seem to be getting a little bit better, while you mentioned in the second quarter earnings that commercial construction continues to weaken. Are there specific reasons why you think commercial construction is falling, and how is HD Supply responding to these?
Generally speaking, the marketplace just doesn't like uncertainty. So while we're seeing improvements in certain areas, various factors including job creation, unstable capital markets, and a volatile mix of current economic policies and the upcoming midterm elections are combining to cause the commercial real estate outlook to remain flat in the near term. Commercial construction relies heavily on consumer spending and on new housing construction, and consumer spending patterns are linked to the current employment environment. So based on current trends and forecasts, commercial construction growth will lag a housing market turnaround by about 12 to 18 months, with an uptick expected sometime in 2012. The good news is that last quarter's view that commercial real estate markets has stopped falling has been confirmed this quarter, and values for high-quality assets are showing strength.
Well, how about the utility markets? They seem to also have weakened in the past year.
There's no doubt that electrical consumption is definitely down as individuals and corporations have trimmed their budgets and as major sectors of the economy like manufacturing have declined. Now, I've spent a considerable amount of time in the field with Rick McClure, who's the president of our utilities business, and the first thing you notice about our utilities customers is that they have been in business for a long, long time, many since the late 1800s. The other thing you notice is the long-standing deep relationships that our local HD Supply utilities teams have established with these customers. Now, this is the result of decades of dedicated service and deep integration into our customers' workflows and activities. And I'm always exceptionally proud when I hear time and time again how the teams have always been there for our customers. But it's apparent that our utilities customers are facing significant change driven by local mandates, the challenges associated with government funding, and the impact of the economy on their customer base. So we believe that understanding what each customer is facing and aligning our actions to make them successful will open the door to new growth opportunities. And also, reliability is of paramount importance to our utilities customers. So they always need to be assured that HD Supply is on firm financial footing and will be with them for the long haul. And this is also essential for our suppliers. With our strong operating performance, recent extension of our debt maturities, and our cash availability of $1.3 billion, that allows me to communicate that we are rock solid financially, that we'll always meet our commitments, and that we're in the business for the long haul.
Now, switching direction just a little bit, we've noticed that M&A activity is picking up in some sectors. Does HD Supply have any acquisition plans in the works?
We spent a lot of time looking at a lot of deals. We actually looked at 69 deals last year, and we did one of them. So we're still waiting for sellers' expectations to get to the right spot so we can, acquire good value and good companies. So we're very active in the marketplace, and, when the deal is priced right, we'll take the deal.
Well, just one last question for you. So what are the top 3 things that should wake managers and executives up at night? In other words, what are the top 3 things that should be at the front of mind right now?
I have 4 things that I always look at. The first and foremost is, do you have the right team on field, and are they focused and motivated? The second one is, am I listening to the voice of the customer and using their feedback to improve my daily actions? Third is, am I applying adequate resources to a few focused growth initiatives so I will grow faster than the markets I participate in? And the fourth one that I added in is, am I vigilant about saving costs and applying investment spending to the highest payback projects? Those are my big 4.
Well, that's all my questions for you today. Is there anything else that you'd like to add?
No, I'm just very, very proud of the team, where we are, and we're really looking forward to the start of a very nice economic recovery.
Thank you, Joe, for taking the time to talk with me today.
Thanks so much, Janelle.